Welcome to This Explainer. Today we're diving into the upcoming IPO for Strider's Impex. Now this is a toy company, but with a really interesting modern twist. They're about to go public, so the big question is this a golden opportunity for growth, or is it a pretty risky bet on a very young company? Let's break it all down.
So first, let's get a sense of the playground they're in. The Indian toy industry is absolutely massive. We're talking a $7.6 billion market. But here's the crucial part. Most of it is run by small, unorganized players. And that fragmentation, well, that creates a perfect opening for a structured, organized company like Strider's to really step in and grab a big piece of the pie.
So, in this huge multi-billion-dollar industry, who exactly is Strider's Impex?
Okay, so Strider's Impex was founded in just 2022, so they're very new to the scene. Their focus is on designing, developing, and of course marketing toys. But here's their secret sauce. They outsource all the manufacturing. This is what's known as an asset-light model. It basically means they don't have to sink tons of money into building factories and buying machinery. It keeps them nimble and lets them focus their cash on growing the business and marketing their products. Pretty smart.
All right, so we know their model is asset-light, but how exactly does the company make its money? Their business really breaks down into three main streams. First up, they do licensed merchandise, which means they're basically borrowing the star power of big global brands. Second, they're building their very own in-house brands, right from scratch. And third, they do co-branded products, where they team up their name with the partners.
And if you look at where the money actually comes from, it's pretty revealing. You can see that licensed products are the real engine of this company, driving a whopping 67% of their income. Their own brands? Well, they're still a pretty small piece of the pie at just 10%, with co-branded stuff making up the rest. Now, this heavy reliance on licensing is a really key point, and we're definitely going to come back to it.
So, how do they get these toys into kids' hands? Well, they use a whole bunch of different channels. They've got a solid online presence on all the big e-commerce sites. You'll find their stuff stocked in major retail chains like D-Mart and Reliance Trends, and they also supply a huge network of those smaller independent toy stores all across the country.
Okay, let's get to the main event, the IPO itself. Let's take a look at the key figures for this offering.
The total size of this IPO is just over 36 crore rupees. Now that's a mix of two things, a fresh issue, where the money goes straight to the company to fuel its growth, and an offer for sale, which is where some of the existing shareholders are cashing out a part of their stake. And the price for a single share, well, it's been set in a pretty tight band, somewhere between 71 and 72 rupees. Now this is super important. This is an SME IPO, which stands for Small and Medium Enterprises. The minimum lot size is 1,600 shares. That means the absolute smallest investment a retail investor can make is over 2.3 lakh rupees. That's a much higher entry point than you'd see for a main board IPO, and it really reflects the whole nature of these smaller companies. Higher risk, but also potentially higher reward.
So, the big question is, what are they going to do with all this new money? The company has laid out three main goals. They want to fund their day-to-day operations, what's called working capital. They're going to invest in their subsidiary over in Dubai, and they're going to use some of it to pay down their existing debt.
All right, time for the reality check. Let's peek under the hood and check the company's financial health. Let's see if the numbers actually back up the story. This table tells a pretty clear story of some seriously aggressive growth. Just look at the last fiscal year. Revenue shot up from about 42 crore to 62 crore. But what's even more important is that this isn't just about selling more stuff. Their profits nearly doubled in that same time, from 4.4 crore to 8.4 crore. That shows the company is getting more profitable as it gets bigger. And if we dig a little deeper, the performance metrics are, frankly, very impressive. The company's EBITDA margin, which is just a fancy way of measuring its core profitability, is a really healthy 15%. But the number that really jumps off the page is the return on equity. It's over 56%. To put that simply, that is an incredibly high number, and it suggests the company is exceptionally good at using its shareholders' money to make more money.
Okay, so we've seen the impressive growth. The numbers look great, but let's get a balanced picture here. It's time to weigh the pros against the cons.
This slide really gets to the heart of the matter for any potential investor. On one hand, you've got this unique, asset-light business that's already highly profitable and playing in a fast-growing market. But on the other hand, this is a very, very young company with a pretty limited track record. And because they have to buy all the toys before they can sell them, their business needs a lot of working capital, which can always be a risk. So what about the future? Well, the opportunities are pretty clear. They can expand their online channels even more and grow their product lines. But, and it's a big but, the threats are just as real. The toy industry is fiercely competitive, and any kind of economic downturn that makes people spend less money could hit their sales directly.
So after all that, what's the ultimate takeaway for someone thinking about investing?
Ultimately, the Strider's Impex IPO really boils down to that classic risk versus reward scenario. It's a chance to get in on the ground floor of a young, super fast-growing company that's in a really promising sector. But all that potential for high returns comes with the very real risks of a small-scale business with a very short history. So the final question you have to ask yourself is this: how do you weigh those odds?